Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. Today's video, very controversial. We are looking at altcoins and in particular, dollar cost averaging being a scam. Yes, we have some proof. Dollar cost averaging can work. How do those two go together? Why is it a scam and how can it work? I'll show you. And a better method than dollar cost averaging for fast and safe gains. Remember that, fast and safe. I'm not talking about the biggest of all time because with the biggest comes the biggest risks. And on this channel, we are not about taking massive, stupid risks. We're about being profitable for the long term so that you can be sustainable in your trading and investing and get to that financial freedom rather than being a fool trying to catch some sort of dollar cost averaging method all the way down, buying, only to see that particular cryptocurrency not make it in the next cycle. That's what we're looking at today. Stick around. I've got tons of information coming your way. So first up, make sure you have liked and subscribed to the video, to the channel. Click that little button down here. You get some nice little fireworks with YouTube's latest update. And of course, go over to the channel and check out the previous videos after this. I'll leave a link to all of the playlists so that you can get a background of what it is that we've been doing here on the channel if you are new here. So the first thing I posed to you in that intro was dollar cost averaging being a scam. I mean, I went through the 2017 bull market and bear market. I heard that from all the people online, and I see the comments as well. People saying it's just these stupid YouTubers saying the same thing to dollar cost averaging, or they're saying to not buy crypto and I should have bought crypto. So there's always these two trains of thought, and I went through it, and this is what I've come out with and the way I like to do things. And the big piece to that is how I am and how I behave as an investor, and you're going to have to make sure that that suits you. I prefer to play things a little bit safer and look for those asymmetrical risks. Basically, safe to the downside, I'm not going to lose too much, and I'm going to make a lot of reward. Okay, that's the main thing that I look for here for cryptocurrencies. And for crypto, what I use them for is to extract profit out of the market, take money, take profits, take whatever from the market using technical analysis. And then I use those profits and put them into bigger investments or holidays or go and have fun or something like that. I don't buy cryptocurrencies in the hope that they're going to be the next Amazon. Personally, I feel that's a fool's game, especially with where we are in a more macro cycle. So I'll leave that for future videos, but that is where I'm coming from when it comes to this particular video. I want to make safe bets. I want to make fast profits in the market. I want to take it from the market and I want to go and put it into other assets. Okay, so think about that as we're going through this. I'm not here to try and take the next Amazon in cryptocurrencies because I've been through the last cycle. I didn't see any one of those besides Ethereum, and I saw 2021. I don't think we're going to see an Amazon from this just yet. Something will come, but I don't want to play that game. I want to take my money and run and go to something else. Maybe it's Bitcoin, maybe it's ETH. Okay, so they're the three things there, and something that's going to be better than dollar cost averaging. In the intro, I had this particular chart up here. This is the chart of Matic. The first is profit from the top of the move here in 2019 to a 50% level. This is a really key area that I look for when it comes to taking profits. And I even did this publicly on YouTube back in 2021 as Solana broke down, got called all sorts of names for it, but essentially that is a very easy key level to take profits. So I'm just mentioning this early on because I posed the question, would you be happy with 3,000% return from one trade? That's all this is. This is Matic. Here is a key entry level, a breakout. Here is a key, very simple exit point. Would you be happy with something like this? 3,000%. The other that we do here is also look at ways to get in earlier and get out a little bit later. Nothing overly complicated, but it's something that we talk about in a lot more detail with our members at TIA. So check out the links in the top of the video description if you're interested in that. By all means, you can stick around on the channel to see what it's all about, but that's TIA Premium down here and also the newsletter. So there's a couple of different strategies here. Either way, they're pretty massive returns. But what we get caught up hearing is having to buy the low. I should be buying that and I should be selling the top because that is a 111,000% return. And that's what you hear spread everywhere. You need to make these big returns buying all these lows. Of course, this is ridiculous. No one is going to buy the exact low and sell the exact top with perfect timing, taking every last cent from the market, nor do you need to do that. As I said in the intro, my goal is just to take a chunk of profits out of the middle of the market. And I have this on log. So if you take this off log, That's what it looks like, basically at that 50% level. And I'm just taking a chunk. I don't need to take every last cent out of the market. However, we do have some strategies to get even closer to that top. Like I mentioned earlier on, maybe in this case, taking somewhere around 7,000 to 8,000% from this particular trade using the rules that we look at. And this is what I look specifically for when it comes to entering cryptocurrencies, potentially dollar cost averaging into them, but more so looking for those fastest gains as they exit the bear and accumulation stage into a faster moving, more bullish type of market. First up, let's take a look at why dollar cost averaging is a scam. I'm going to use my experience from the previous cycle, but this relates to all cycles within crypto because we're essentially looking at penny stocks. So you could relate this to penny stocks as well. Anything that's basically new into the market, there is no proof that they have been around. I know we always go back to things like Amazon and Google and things like that have come out of certain massive cycles. But trying to pick that from the other 20,000 different cryptos or thousands of other stocks that were out there at the time is a very, very difficult job to do. But there are ways to find out which ones are going to be stronger and weaker. So dollar cost averaging is a scam. Let's just take a look back at a historical snapshot of December 2017. A lot of these names we won't recognize, but I will assure you these had the same level of interest and hype and hopes and dreams as all of the headlines in 2021. And obviously we're into 2022 now and these things have come down in price. But going back to 2017, IOTA, massive cryptocurrency. NEM, I've pulled up some other news articles from that period as well, describing these particular cryptos. NEM was up there. Obviously Bitcoin Cash at number 3 here, $1,800 for a BCH at $31 billion market cap. NEM, it was China's Ethereum. You go down the list, EOS, massive, doesn't do anything now. NEO, another China Ethereum, huge. These sort of names related to anything that we're looking at today. Stratus, this one had about 300,000% return, going from a few cents or even fractions of a cent up to over $20 per strat. And you can go down the list and you get the idea. We go have a look at some of these articles. XRP up 36,000, NEM 29, call it 30,000, ARDR, XLM, Dash. These all had masternodes at the time. Dash had a masternode, which is very similar to what we saw in this last cycle of cryptos. You'll be able to hold them and get paid out in that particular crypto. It's exactly the same thing, just titled something different. This particular article here, back 4 years ago, February 2018, in the midst of the crash, as soon as we came out of that, a lot of articles been drawn up about how these cryptos could do better in the next cycle. Investors are looking forward to seeing this newer coin outperforming some of the bigger altcoins in the market. You know, Bitcoin Cash, Craig Wright, you know, these are all names of the past. And I would guarantee that we'll see this again going through the next cycle, which is pretty much where I'm coming from when I'm looking at this here. Is DCA is a scam. There are a lot of cryptocurrencies. My view and my experience has been that a lot of them won't make it. And what happens with investors is they get caught up in the dollar cost averaging into these cryptos, looking to invest in one of the currencies on the list. Market growth for altcoin 2018 looks great. Hearing all these sorts of things from influencers and the like and all that sort of thing. So we'll continue on with the scam part, but there is also the possibility of DCA working. And I want to have a look at that as well. Now, DCA can work, but how much percent are you looking for? Were you happy with 3,000%? If so, some of these could work. If you are looking for more than that, something that's a little bit easier, there are going to be ways to do that. And I'll mention that in just a moment. But just take a look at Strat here. If we take it off log, this is essentially what happens in bull markets. They go from nothing, under a cent or a couple of cents, up to $20 odd, all the way back down. The next bull market, this is 2021 in comparison to 2017, nothing like it at all. And what we've seen this year is things like Solana go absolutely gangbusters, and we're hoping that it does the same thing next time, going from 50 cents up to $260, those sort of returns. But unfortunately, it probably won't happen. I can even go back just to last month with Quant. I didn't talk about this on the channel, and all I heard at the peak in the middle of October of 2022 was, why aren't you talking about Quant? Why aren't you talking about QNT? And a month later, 3 weeks later, you can see that we're all the way back down here with the hype gone. So this is going to happen every single time. The hype is going to be there, and it is our job to avoid that particular hype and look for the stronger stuff. As I said in the intro, this is very high risk play, going into the DCAing stuff without any sort of technical structure to support the theory that this coin is going higher. And if you believe in the fundamentals of a project and you can believe or hope to see that that can do a 200x in the next cycle, don't let me stop you. Everyone is different with their plans, but that's not the strategy that I'm using here. I want to be a little bit safer in what I'm doing. And if that is the strategy of looking for 200x's or 500x's, really the mathematics says that you need to be out there probably shooting your load 90, 95% of the time, or at least throwing out 95 different shots in order to maybe catch 2, 3, 4, 5 out of the 100. So if that's the maths game that you want to play, it can be won. They're the details that you're looking for. That's the maths. But I'm looking for something lower risk with higher returns. So in this, my goal is not to find the next 100x. I just want the market to tell me what is going to go up. And I think the biggest job here that everyone forgets, rather than trying to DCA and saying, got to buy low, it's basically to avoid the lemons of the last cycle and just avoid the lemons in general. If you can do that, you're basically saving yourself a ton of money and a ton of heartache. And you can then use that money to go and purchase, buy any other assets that are stronger, that are going up. Like I said, that stuff that we're going to look for that are going up faster and quicker and safer. DCA being a scam. Let's have a look at that on the chart here. And this pretty much goes for almost every single cryptocurrency. You have this big blow off top, something that's done really well in the previous cycle, that's got a big hyped up name. The retail market really loves it. They're basically buying all the dips. And that's what DCAing is for the everyday retailer, or especially what I see and hear on YouTube and Twitter, is they buy these levels all the way down. I'm buying now. You see those posts all the time, and they're basically buying here, and then they buy the peaks, and they keep buying. This is now a year on since the peak, and they're still buying. And then you go 2 years on from the peak into 2020 in this case, and they're still buying. And then they go 3 years on, and they're still buying, or if they've got any money left, or they've got some hopes and dreams in it. And then they finally get this little pump up, and they're all excited. But when you look back compared to the previous cycle, it was pretty much just a waste of time and money to try and get this little move here after all of the hopes and dreams have been blown in the last cycle. And then the average of that dollar cost averaging is pretty shocking, really. If we throw it back on log, you can see all the way down, it's just lower lows and lower highs until you get just that little bull market, and then the market rolls over again into the next bear market. So you basically lost a lot of time. And we don't have that much time in the markets to make big money. So I would rather forego trying to win it big 1 out of 100 times with some sort of 200x mega shot and just wait for the market to tell me when to get in. And that's probably what you've been waiting for so much. So I come back to Matic to have a look at this example. This is basically the bull market of 2021, January into the peak of May. Yes, we did go up higher into November, December. Some of them peaked in January as well in 2022. But essentially just using a peak of May of 2021 and call it November of 2021 as well. So there was peaks about 6 months apart here for many, many altcoins. Yes, some did very little, but essentially that's what we're looking at here. And so you had a few months in the market, 1, 2, 3, 4, 5 into that peak. Not much happened in the next peak. So if we take a look at this off log scale, you do get another big run out. So it's another very tradable range. I'm always talking trading here, not holding this crap long term, because they are all shit coins for a reason. That's why they're named shit coins. Basically just looking to take or extract the most amount of profit in the safest way possible. And so looking at how this is done. So I've talked about here, better than DCA. What I believe this strategy to be is better than DCAing. It's faster to get the gains, and it's safer to get the gains. And all I'm doing here is buying on the breakout of macro resistance levels. This is called buying high and selling higher. It's something that WD Gann did. It's something that he talked about a lot. It's something that Wyckoff did. You wait for these areas of accumulation to finish, buy the breakouts on confirmation that the market is going higher. And when this happens on a macro scale, it always happens very, very, very fast. So you can extract those profits in the most quickest time possible, rather than trying to buy in through here in the hopes that it does that. Because remember, there is no guarantee that we're going to get this. The only time that this is almost guaranteed is when it breaks critical structure to the upside. That's the only time that there is far more guarantee that it is going to happen. And so if we can get those periods and just take that profit, there's going to be the fastest, safest gains that we can make. But that's just the entry. What about the exit? Well, I said here 3,000%, and I posted this on YouTube at the time that I was selling Solana back through, it was around January, February, March of the year. Solana had a very similar breakdown at that point in time. Basically, this is the 50% level from the all-time low to the all-time high. It is a macro 50%, not looking at the dailies or the hourlies or even the weeklies. This is the entire history of, in this case, Matic. And just coming back to a 50% level or breaking a 50% level is key signals that this market is extremely weak. This goes for every single market. It has been data that has been tested over 100 years. Again, started this in the early 1900s with decades and decades of research. And this has been shown to be very proven technique to sell out of the market. Like I said, you might be pretty cut that you didn't sell at $2.60 and you're selling at $1.60 or $1.50 instead. But if you're taking massive profits, in this case 3,000%, maybe it's less in other markets, you've got to be happy with taking a ton of profits, especially when the market goes so far against us. In altcoins, they essentially come down 80, 90, 99%. So you have a lot of opportunity to get back into these markets as well and extract more data, more gold from those markets. That's all we're trying to do here. That's my key, is to extract gold from the markets, extract money from the markets. I'm not trying to make the next 200x% return. And so what we also look at is ways to extract that money sooner, but at the risk of missing out on further upside as well. But we got to be happy with 8,000% return in this case. And what I'm talking about here is if we see a market go into new all-time high territories, which in this case Matic did in December, it broke above the May top, but then came back underneath and closed underneath that previous top, that is generally a signal that this market is about to get extremely weak. Closing underneath previous old all-time highs and then consolidating for a period of time is an extremely weak signal. So maybe you sell out as it breaks back under, maybe you sell out a little bit lower, and in which case you're still up thousands of a percent, anywhere from 6,000, 7,000, 8,000% return in this case. But either way, all of these are very profitable ways to trade these markets in a very safe manner by buying when there is a lot of confirmation. Basically, the sheep are ready to go and we shoot straight up to these prices. And then on the way down, this is when everyone thinks it's going to keep going up. But there are some signals here to tell us that this is getting very weak at the peaks. And if you're still unsure that it's weak at the peaks, then we still have the 50% level here to protect us, telling us that the market is about to get weak. We are going to go under $1.60 or $1.50 here and then drop back down very quickly. This happens time and time and time again across cryptos, stocks, futures, anything with a chart. You will see this happen in the market. Basically what I'm getting at here is this is a strategy that has been tested for a very, very long time. And it's not something that is just created like a lot of these models that we see in cryptocurrency, where the models continue to break and they have to be recalculated again, curve fit to the market for the next cycle. This is not that. These things are very dynamic and they have to be watched along with what is happening in the market at that time. For example, this 50% level, at first in May, it was above here at 270 at that previous all-time high. We had a break of 50%, and that's why we could be out at 2,900% rather than the 3,000%. But either way, it is a huge return from two very, very simple rules. It is essentially one trade with a buy and a sell over the course of 5 months. That's it. So I've covered DCA as a scam. We've covered a better way to DCA, faster, safer gains. I've talked about how we can get this even closer. We can hone in on some of these tops, getting a little bit closer to those buy entries at the bottom and the tops to make even bigger gains. And I mentioned that can be found in more detail in the premium course here. Links are in the top of the video description. But nonetheless, there are many ways to get in and out. The most difficult thing is, if you've been around the bull market, you know how difficult all of the noise is at the tops. When a lot of your spidey senses are telling you shit is probably going to get a little bit wrecked soon, but everyone's hyped up in the good moods of the bull market, that is the time that is the most difficult to be able to take those profits. Because once you take them, all you're hearing is people saying the market's going to go even higher. It's going to go from $2.60 to $26. And so you start to lose your mind unless you have a plan. And that's what we focus a lot on here on the channel. But there's one final thing we wanted to look through, and that's how can the dollar cost averaging work? We've looked at the better than DCA option here, the fast, safe gains. But if we really want to get those lows because we just can't stomach the thought of not buying anything for a year or two, how is the DCA actually going to work? Well, the first thing we look at, which is very similar to what we talked about with the Matic example, buying on the breakout of a macro resistance level, is something like this. In this example here, Ethereum, buying the dips after those breakouts. And this again requires a lot of patience. A lot of people don't wait for it, but you're still getting those extremely low prices that occur during the bear market. So you can see Ethereum here in the last cycle, we had 2 macro swing tops on the monthly. The market broke out of those into June. This was extremely hard not to buy into during May and June. And I won't say that I held out. I definitely did buy some Ethereum at $200, $300, even $350 per ETH. Now it looks fine. This DCA worked out. However, what I can see looking back on it is that we had the macro breakout of this particular level, because what can happen is we start to break out and we have we start to hit this top and we have no confirmation of the breakout of that macro swing top. So looking back here into May, we had the swing top, but then the market trends down and down and down, and we get the absolute dump after that point. Now, we could be in that dump now, and this might be a fantastic time to DCA into something like ETH or any other crypto that has a very similar pattern to this. But what we don't have yet is confirmation of a break of a macro resistance level. So that can happen, and then we go through that difficult, extremely difficult task of many months of waiting for this market to come back and test some of the previous tops. And that is basically proven in all markets that while we're in a bear market or accumulation stage, we will get some sort of retest of the price. It may be all the way back down to that previous top. It may be a little lower. It may also just be a slight correction before it pushes higher, in which case we can then buy on the breakout of the next top. And like I said, the point here is not to be buying the bottoms, because like we already covered, a lot of these cryptos will be defunct. There's 20,000 of them. A lot of billions of dollars have gone into this, and a lot of billions of dollars have been lost. And not all of these are going to make it. And the only way we can see they're going to make it is if they start to put in higher lows, which means there are buyers coming in, and they start to put in higher highs. And we have this opportunity right now in this bear market, in this potential accumulation stage, to be finding those cryptocurrencies that are going to do that. We can do it in a safe fashion rather than trying to buy these bottoms. Because if you're going to buy the bottoms, you have to play the odds in your favor. You have to shoot your shot 99, 100 times to try and get 1, 2, 3 of those that are going to work out to repay all those other 97 times that you've lost. If you get one that does a 200 or a 100x, it's going to pay for the 97 or 98 of them that just did not make it, and then you're going to make some. So as you can see, it's basically all a mathematics game. Do you want to play the high risk game, the high risk, high reward, shooting your load 99, 100 times to try and make 1 or 2? Or do you want to play it a little bit safer? Do you want to play the game where you're waiting for the breakout, wait for the retest, you have a lot of patience, and you're just taking chunks of every single market, knowing that the probability is in your favor when these things break out? As I said, I'm just trying to take some chunks out of the middle of these markets. I'm not trying to blow my load on every single crypto, which I think is going to do a 200x in the next market, to try and pay back all of the other losses and all of that time, which is the most important, that time that I've lost waiting in a bear market for the next big breakout. And when these breakouts do happen, they go fast, they go hard, they are short-lived. That's what I want to get. I want to get that quick money, and I want to make sure that I'm going to be getting that money, not just hoping for it. Now, if you found a ton of value from that and you want to learn more, we are doing a masterclass on altcoins. When is the best time to be buying altcoins? How to get in for the cheapest, best price, the safest way, and obviously get out at one of the best prices as well. That is coming up on TI Premium this month. So if you want to join us, all right, check that out down below. We'll see you at the masterclass there as well. Thanks once again, guys. Check out the videos that are popping up on your left-hand side right now. Get those fireworks going off, and subscribe, of course, to the channel. See you at the next one. Till then, peace out.